Welcome to Dissolve. One of the big worries for company directors is the prospect of personal liability for company debts. In this video, I'll run through the 5 main ways that can happen. But firstly, the starting principle is that there is no automatic personal liability for company debts. That is, if a company incurs a debt, then it is the company that is liable, not the directors. But personal liability can happen, so let's have a look how. Number 1, directors' loan accounts. What you'll want to do is check if your most recent balance sheet shows directors' loans or directors' drawings in the assets section of the company accounts. If it's there, you need to see your accountant to see if it has been classified properly in the accounts. If it's a genuine loan to the directors, then it'll have to be repaid. Number 2, insolvent trading. The law is pretty straightforward. If your company is insolvent and it incurs new liabilities, then a director can be personally liable for those new liabilities. We've got a page and a video elsewhere on this topic, so I won't go into any more detail here. Number 3, sale of assets at undervalue. Sometimes in pre-liquidation reorganisation, a company sells or transfers its assets to another party. If those assets have been transferred at undervalue, then a liquidator can recover the shortfall from a director personally. Number 4, tax debts. The main one to look for in this category is director penalty notices, which come from the ATO for unpaid PAYG. That gives a director 21 days notice of the impending personal liability. Again, this is a topic we've covered elsewhere, so I won't go into any more detail. Number 5, personal guarantees. That's where a director signs a document agreeing to pay a creditor if the company doesn't pay. It typically happens in 3 ways. Firstly, nearly always in a small or medium-sized business, if a company signs a property lease, a clause in that lease will be that the directors personally guarantee the lease payments. Secondly, many trade creditors have a section in their credit applications where a director guarantees the company's debt. Thirdly, company credit cards will also include a clause whereby the user of the card is personally liable for the debt. So remember, there is nothing automatic about director personal liability, but if you are considering liquidation for your company, then you should also consider whether any of the 5 things I've mentioned will affect you personally. Call us if you need any further advice on this topic.